Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, I'm 29 years old, and what you're about to see today is all the ins and outs of the portfolio I'm going to use to retire early at the ripe age of 50. As part of the ins and outs I just talked about, I'll be sharing my current portfolio value, the best and worst performers in the portfolio, what I bought in April, the dividends received in April, check on the month over month and year over year growth, look at my dividend projections over the next 12 months, I'll be checking on the status of my very own dividend snowball, and much more. If any of that sounds like a good time to you, make sure you consider subscribing to the channel for more content like this and plenty of other very exciting dividend content in the works.
You won't regret it.
But before we dive into my portfolio, I'd love to hear some exciting news about your dividend portfolio. Did you get any crazy dividend raises, receive a new record in passive income, find any new exciting stocks? Let me know in the comments down below.
I'll be waiting.
But as you can tell, we got a ton to get to, so let's get to it. All right, so the first thing we're going to look at here is the account balance of this portfolio, the one I'm going to use to retire early. You guys can see in January of 2024, I had an account balance of $67,196.27. Concluding last month, that went up to $71,420.29. But now, with April being a horrible month for my portfolio, I'm now down to $69,888.77, and that's including the contributions I added this month. And of that $69,000 I just mentioned, I do want to remind you guys that $17,000 of that is kept in SPAXX as the wife and I's emergency fund, just in case anything comes up that we have to pay for. And in the meantime, it's going to collect that current 4.96% interest. So you always like to see that. All right. And the next thing I wanted to share with you guys is the amount of money I had to invest for May. You guys can see that I had $833.34 added to this account on April 30th, aka May 1st. And that's out of the $2,000 that the wife and I split to invest per month. We have $583 going in her Roth, $583 going in my Roth, and the remainder going in this account. With that $833.34, that brings my total investable amount in May up to $904.11. So down here, you can see where it says available to trade. And keep in mind that the first $17,000 in this account is not touchable. That's the emergency fund that I just talked about. So anything over $17,000 is what we use to invest. Now, what will I be investing in? Well, here's my positions in this account. And for anybody that's been here for a while, you know that there's nothing changed on here. But for anybody that's new, here's all 11 of my positions. And I'm currently running with an active and dormant strategy with my portfolio. So 9 of my 11 positions are currently active, with 2 being dormant. The 2 dormant positions are actually Starbucks and ExxonMobil. And the reason behind that is they just don't meet one of my 3 criteria. I actually have a video talking about that. And they don't meet the most important criteria. So at this time, they're suspended. And if they ever meet my criteria again, I'll buy more of them. You know, they'll get added back to the list. So next up, I actually wanted to show you the top 3 best performing positions in my portfolio over the past 30 days. So in April. So as I mentioned, we don't have too much great news to share. As far as the performance of the actual individual holdings this month, April was a very rough month for my portfolio. I'm curious to see if you guys had a great month this month or if you guys share the same pain I had. So coming in at number 3 is Apple. That was up 0.11%. So big win there. It was basically flat over the month. Coming in next is ExxonMobil. That was actually up 2.11%, which obviously is nothing to write home about, but that's pretty good performance over the last 30 days. And then coming in at number 1, my best performer this month is actually NextEra Energy, which has been a dog in my portfolio for quite some time. That was up 5.7% over the last 30 days. And as I mentioned, this was a very rough month for me, so I have plenty of stocks to share that were in the bottom of my portfolio performance, but I narrowed it down to 3 just to save some time. So my third worst performing stock in my portfolio is Illinois Toolworks. That was down 9.04% in 1 month, which is pretty impressive. But wait, it gets worse. So then you get into number 2. My second worst performing stock over the past 30 days is AbbVie. That's down 9.77%. And then here it comes. The winner of a category I don't want anybody to win in is Pool Corp. One of my favorite stocks was down a massive 10.18% in just 30 days, which, at this point, that's pretty impressive. So you got to, give a pat on the back to Pool Corp for me. So, but with that being said, the next thing I wanted to go over is I want to see how those, the past 30 days has actually impacted my portfolio and the total gains of these positions as a whole. So here you'll be able to see my top 3 performers overall since the whole holdings of these positions. So coming in at number 1 is ExxonMobil. That's up 39.82% or $1,388.25. Number 2 is Costco, my newest position. That's up 34.91% or $1,600. $1,393.12. And then coming in at number 3 is Microsoft, that's up 27.09%, or $1,379.14. Now, of course, as I mentioned, there's a flip side to this. Like, I'm not a genius. Not all my stocks do well, as we just saw with this last 30 days. So right here, you'll be able to see my biggest losers in my portfolio. So you guys can see APD up here at the top. That's down 15.64%, or $605.61. We have Starbucks that's down 9.03%, or $391.09. And then we get the Next Era Energy, which, like I said, was just one of my best performing stocks for the month. It's still down 7.02%, or $266.55. But if we can get another good month, maybe it turns green for May. So stay tuned for that. We'll see how that one goes. Down here at the bottom, I did want to draw attention. This portfolio is still up 10.29%, or $4,855.88 overall. All right, and as I've already beaten like a dead horse, my portfolio had a horrible last month. You guys can see here that my time-weighted and money-weighted return, doesn't matter when I bought, I was still down 3.15% over the past month, which is awful. Good news is, the S&P, Dow Jones, and NASDAQ all did worse than me. So it seems like my portfolio, even though I don't necessarily know that I constructed it like this, it seems like it's got like almost like a limited upside. Like, I'm not getting as big of gains as the market when the market gets its gains, but I also have like really good downside protection. Like, I think it was 2022 when the market was down a lot. My portfolio was down hardly at all. But then, last year when the market was up a lot, my portfolio wasn't up as much as the market. So I don't know. We'll just, work on the, construction of that over time. But yeah, that's one thing I'm noticing. So I got my negative 3.15% over the past month for me. You can see the S&P 500 is down 4.08. Dow Jones is down almost 5% at 4.92. And the NASDAQ was down 4.38%. So year to date, my time-weighted return is a positive 0.72. And my money-weighted return is a positive 0.65, and that's obviously including my negative 3.15 over the last month. And then the S&P is up 6%, the Dow Jones is up almost 1%, and the NASDAQ is up 4.5% year to date. So we are underperforming year to date, but we did catch up and make a little ground over the past month. So stay tuned for that, and we'll see if we can catch the market. Maybe they'll have some more bad months, and I can have some good months in there, and we'll catch them. So next up, I wanted to talk about what I bought in April in this account. So as many of you know that it's been here before, and if you're new, again, welcome. But here's how I do things. So I dollar cost average over basically every trading day of the month. It reduces my emotions in the market and such. I can just add little bits of money to the market every day. I buy up, I buy down, I get whatever. I get the average price of all of it. So here with this fancy little chart, you'll be able to see what I bought. All the stuff on the far left is my companies. You'll see how much of each of those I bought, the amount total I spent in the sum of amount column, and the average price of my purchase of that holding. So it looks like the thing I bought the most of this month was Next Era Energy, 1.312 shares. The thing I spent the most money on this month was AbbVie. I bought $193.32 of AbbVie at an average price of $172.67. It looks like the stock that added the most in added forward income here all the way at the right also was AbbVie, adding $7.02 of added forward income just by adding more of those shares. So in total for April, I ended up spending, I got 4.666, oh, that's rough, 4.666 shares of companies in my portfolio. I did that over 22 trading days. I spent $917.22. The average price of everything I bought obviously doesn't matter, but I did add $18.13 in added forward income just from my purchases. So that's pretty cool. So next, despite it being a really rough month and me buying, like I said, 22 days of the month, I wanted to show you my cost basis review. And I thought this was very interesting when I was putting this together. You'll see here, so on the far left, obviously, is the ticker. The next column says previous cost basis. So that's what my cost basis was at the conclusion of March. The new cost basis is what the cost basis is at the conclusion of April. And you're going to notice that anything that is a positive number is red because that means my cost basis went up. For example, Apple went from 164.60 to 164.68. So now my cost basis rose by 8 cents. That is quote unquote bad because now, I own more shares at a higher price. So therefore, when it goes higher, I make a little bit less money, whatever. We all know how cost bases work. So the green ones, which is the negative number, which I know it seems backwards, but that means my cost basis went down. For example, in APD, I used to have a cost basis of $281.27 per share. That's now down to $280.13. So my cost basis actually dropped by $1.14. What I thought was interesting about this is the fact that the month was so red for me. Like I said, I'm down 3.15% or whatever it was, but yet I was still only able to get 2 quote unquote deals and lower my cost basis. So that was pretty interesting to me. You guys can also see here in my comment section for Starbucks and ExxonMobil, I'm suspending buys. I don't know if it's for all of 2024. I don't know if I'm going to reevaluate quarterly. I didn't in quarter 1, but I don't know if I'm going to reevaluate maybe halfway through the year and see if Starbucks and ExxonMobil are back in buy territory for me or whatever. But yeah, so there's my cost basis review. You guys can see, you know, all the goods and the bads for my cost basis. At the end of the day, I don't super care too much about this. I just like tracking numbers, so you guys get to look at this chart with me. Main reason I'm tracking it is strictly because, the main reason I don't care about it is strictly because I plan to own more shares of the companies I have. The only way to get more shares is to buy more shares. So I don't necessarily care that my cost basis in Costco went from $532.21 to $535.80. I don't think it'll be anywhere near $535.80 in 21 years when I'm hoping to retire off this portfolio. It'll be substantially more than that. So, if you're waiting for Costco to get back down to $535, you might be holding your breath for a long time. And, I'd hate to lose you as a subscriber, so don't do that. So, so there's my cost basis review. So the next thing I actually want to go through is what everybody's here for, right? I want to see who paid me in April. So I actually only got 1 dividend payment. April is by far my lowest dividend receiving month as far as companies that pay me and income. But I got 1 dividend payment and I got 1 interest payment. So the interest is, of course, on that $17,000 that we have sitting in cash. I use that extra money, the interest that's generated, to add back to my portfolio to invest for the following month. So, right, like I only keep the $17,000. Anything over that, including money I add, credit card reward points, or the interest that comes from SPAXX. I don't know why I said that weird. Anything that comes from SPAXX, that all gets added over $17,000 and I get to invest that. So the first payment was from ITW on April 11th. I got $22.92. I did drip it. I got 0.087 shares, which, obviously isn't a lot. I'm not going to write home about that. But if you look at this chart, all the way at the top, you can see how much I made in ITW since I've owned them. So I have a total of $125.37 received from ITW. That's 5.92% of my total dividends in this account have been received from ITW. And with the drip on, ITW's actually bought over half a share of its own company for me to own. So that's, say ITW is paying $2 a share per year. They're going to give me $1 just, because they bought it. So that's cool. So you guys can go back all the way back to January 14th of 2021, where I got my first 34 cents. You guys can see how that's quickly grown all the way down to where we are today at $22.92. For example, last April 13th of 2023, I made $12.05 from ITW. And now here we are at $22.92 for this April. So we got a nice little growth there. The next thing I wanted to go over is the SPAXX payment, which you guys can see here. SPAXX has been very kind to me, definitely recently. You can tell pretty much when I started moving my funds into this holding. SPAXX actually brought me $602.71, which is 28.46% of the dividends received in my career in this IBA account. Has been from this interest payment, which is really, really cool. I have a whole video talking about why I'm using this, my plans when or if interest rates get cut, the whole 9 yards. So I can link that, in the link above my head or something on the screen. So check that out if you're interested. But yeah, so SPAXX has been doing very well to me. You can see my very first interest payment was back on November 30th of 2021. I got a whole penny. So that was cool. There's no drip to this. Like I said, it just gets added back to itself. As cash. Your cash makes you cash. It goes back to your cash. So you guys can see last month I made $73.80 down here at the bottom on March 28th, 2024. And then this month that's $70.93 from SPAXX. So that's super cool. So we're over $70 in interest from SPAXX over the past 4 months. 3 of the 4 months has been over $70. So you don't hate to see that. You like that a lot. So with that being said, what we're going to do now is we're going to combine those numbers. Anybody that likes math, you've already done it in your head. Anybody that doesn't like math, me included, we're going to add those up and we're going to check to see how does that compare to last April and how does that compare to quarter 1. We're going to check that out. So on this chart, one of my favorite charts on my spreadsheet, you'll be able to see all the way over here on the right. You'll be able to see Q2, April 2024. I made $93.85, which obviously we're not, paying no bills with that. I mean, you could pay some of your bills, but the goal is to let that compound and let that build itself. With that being said, you can see that that's a 176.8% year-over-year increase from the previous April. So April of 2023, where I made $33.91. This is 176.8% more than that, which is always good numbers. Like I said, I've said this for years at this point. On the channel, I've been saying it pretty much since the beginning. When you're starting your dividend portfolio, you're really going to want to focus on the percentages. That's why it's really good to have a chart like this, because your percentages are going to be so motivating. They're going to be so large. You're going to have hundreds, even you can see up in January of this year, I had a 1,516.4% year-over-year growth. Now that was in large part because of the special dividend from Costco. I got $99.11 from Costco, which is, obviously I appreciated, but that's not, normal. But you'll see a lot of my percentages are in the hundreds or at least high double figures. That number eventually will come down, right? It'll eventually start to drop where I won't be making, 200% month over month, year over year progress. But as the portfolio is small and it's not making as much in dividend income, the percentages will be really big. So that's what you can really focus on. As your percentages start to drop to maybe, 10, 20, 30% year over year growth, your numbers, your month over month number should start getting bigger. And that is where you switch your motivation. Like, oh, okay, cool. Now I'm making $1,200 a month, $1,400 a month, whatever it is. So right now, $93.85 is my total for April. You can see that populates in the total quarter sum for that $93.85. It looks like I'm doing awful. I'm negative 54 or 57.4%. But that is including May and June of Q2 2023, which obviously haven't happened yet this year. So stay tuned for that. That next number will pop right in there, and we'll see if I have a feeling that my May 2024 number will not only be higher than my May 2023 number, but it'll also make my Q2 2024 number higher than my Q2 2023 number. That's not so many numbers. Basically, May will push me over what I made for all of Q2 last year, just in April and May of this year. June will all be gravy. So that's basically what I'm trying to say there. A lot of words, but next thing I wanted to show you. Oh, last thing before we go. If you look down here at the bottom, I am at $641.70 in passive income created by this account just in the first 4 months. So that's super, super exciting for me. As you can see, first year was $23, second year was $209, third year was $307. So this year we're already, all of those combined is already better than this year, and we're only 4 months in. So I'm super excited about that. So with that being said, I want to know what's my projected annual income. So here's this chart where you guys can see that in January, I had projections for this account of $918.73 for the year. That moved up to $966.71 for the year as of last month. And despite being bad and having a bad month, having bad performance in my portfolio, the markets being down overall, all the things, that's one of the great things about dividend investing is I was able to still add income to my portfolio via dividend raises and via money added to my portfolio. My yields are now higher because my positions went down, and I actually added passive income to this portfolio despite the markets being down. And then when the markets rebound, I not only have more passive income, but then my positions are up anyway. So now with April of 2024, I'm sitting at a projection of $988.93 for the next rolling 12 months. One thing I do want to mention about this, and I've mentioned this before, is this doesn't include the interest payment I've been getting, like the near $70 I've been getting the last 4 months. This doesn't include that because this is just dividends. This is not including that interest payment at all. So, if I, get about $70 a month for the rest of the year, you guys can do the math. I'm not doing it. So add that to the 988 projection, and we'll see where we're at for the end of the year. I'm pretty excited about that. So with that being said, I want to show you how much I've earned in this account in career dividends in my, retire early account. That's my goal for this account, is to, use the money to eventually retire early for not only myself, but the wife, and we can kind of do whatever we want at the ripe young age of 50 years old. So with this chart, real simple chart. This is my IBA, the account we've been talking about. I've made $2,117.66 in this account, which is obviously 100% of the $117.66. I've actually gotten 10 shares, a little bit over 10 shares for free in this account, just by drip. So the drips bought me 10 shares of, money producing assets in this account, which is, I appreciate the drip. Thank you a lot, drip. So Last thing I'm going to show you guys, I think it's the last thing. So last thing I want to show you guys before we go is I have the dividend snowball charts, which the first one you'll see here. This first one, I now added a new header, so it says buy 100s. And I've talked about this before on the channel, actually specifically in these videos, where I've mentioned I need to start adding more increments, just because like doing 100, like I'm starting to reach $100 every month so quickly that it's getting too quick to track, which is always, that's a good problem to have, right? I'm making money so fast, I need to find a new way to track it. Elon problems, right? So, the first chart that you're going to see, it says buy 100s at the top. And this is a illustration of the dividend snowball, right? Many of you have heard of the dividend snowball. It's this mythological thing where as you make more money from dividends, it gets reinvested, which makes the snowball bigger, and it keeps going and gives you more money and makes the snowball even bigger. So this is the visual representation of that, other than like just a snowball rolling down the hill, right? So on this chart, you'll be able to see that from May 30th of 2020 is when I got my first dividend in this account. It took me 394 days to make my first $100. You guys can see the progression of that all the way down to down here at the bottom where I just hit $2,100 in this account. That took me only 33 days. And like I said, this is my slowest month by far. I only get one dividend and one interest payment. So next month, I wouldn't be surprised if I break one or two of these $100 milestones. So stay tuned for that. So as I said, I had to break it up and make it a little bit more challenging. So here's my 250 chart where you can see it took me from May 30th to February 15th of 2022. So almost two full years, 626 days to be exact, to make my first $250. Then it took me 296 days to make my next $250, 169, 91, 82, 58, 35, 41, so on and so forth. You guys can follow along. Obviously, the next one, the negative 4,000 or 45,000, that one's not filled in yet because I haven't got the 2,250. Stay tuned for that. So there's that one. And then I have two more charts. I'm just going to put these on the screen real quick for you. So this is by 500s, 922 days for the first 500, 260, 140, 76. You guys can see how it's progressing. And I've only made, $2,100. So I only have two of these buy 1000s. It took me 1,182 days, so almost 1,200 days to make my first $1,000. It took me just 216 days to make my next $1,000. So if that's not a representation of the dividend snowball, I don't know what is. These charts are super simple to make. If you guys are Excel special at Excel, like not in a good way, let me know. Just email me at dividendobsession@gmail.com. I can send you guys over like some kind of template that I'll make with this. You guys can add your own dates and stuff in there. But I think this is super important to track. I don't see many people tracking it. I think it's great. It's very motivational for me. So last thing I wanted to share with you guys, I said that before. So this is actually the last thing. So the last thing I wanted to share with you guys is some good news about this portfolio, right? It got beat up all month. It got Mike Tyson, Jake Paul. So I want to share good news. So the good news is with the kind of companies I invest in, they typically get dividend raises. Now, what I did get, I actually got one to report on next month's already because I'm recording this as of May 3rd. But I have one already, I think actually two that come out next month. So stay tuned for that. But the one I want to share with you this month is, done before this recording, is with Costco, right? Costco gave me a 13.7% raise for a company I don't work for. I don't know how many of you guys have day jobs. But that nervous talk you have with your boss where you're like, hey boss, I've been doing a really good job. I like a raise, or maybe at the end of the year, they'll give you your raise and it's like a 2 or 3%. And that's like a place you work. You go every day, you spend 40 hours. Sometimes you work overtime. You have to deal with coworkers you don't like. You probably don't like your boss either. They'll give you a 2 or 3% raise. Here's Costco. I don't work for them. I've been in Costco, obviously bought things from them, but they're giving me a 13.7%. There's no awkward conversation. There's no, hey boss, I did this. There's no, hey Troy, you need to do better XYZ. They were just like, hey Troy, here's 13.7% more money just for holding our stock. So you got to appreciate that. So they went from $1.02 per share per quarter to $1.16 per share per quarter. So obviously the forward yield still very low, but I'm making 13.7% more money. And I didn't even add any more money. I mean, I obviously bought Costco, but I was going to get 13.7% whether I did or did not buy additional Costco. So you love to see that. But before we go, I wanted to hear your feedback on these two things down in the comments. Do you guys have anything that you see on other people's dividend recaps that you'd like me to also tell you about from my portfolio? Let me know that down in the comments. I want to provide you guys with the best experience, and I want you guys to have all the information you'd possibly want to know about my portfolio. So like I said, I'm open to whatever you guys have to say. And lastly, tell me about about any good news you've had in your portfolio over the past month. So in April, did you guys get any crazy dividend raises? Did you guys have any stocks that performed super well for the month? Did you guys have any record income from April? Let me know your April income down below. I'd love to hear it and cheer you on in the comment section. I just released a brand new video on my channel talking about my 5 favorite dividend stocks for this coming week. If you happen to miss that, make sure you check it out right here. But until next time, see you.